Hi there, and you have just tuned into Dukascopy TV today. Right now I have Ion-Marc Valahu. He is the co-founder of Clairinvest, and today we're going to have a look at ongoing equity correction. Welcome today.
Hello.
So is this a normal consolidation, or are things taking a turn for the worst?
No, I think it's a normal course of action in the markets. I guess for the last 4 to 5 years we've forgotten what was a correction, a natural correction, as opposed to the 10 to 20% we've had in the last years. But I'd say now we have had a nice run in the equity markets generally across the world since July, August of last year, and since the beginning of the year we were almost up over 10% across the board, and so now we're correcting, digesting the performance, waiting for new data to confirm or disapprove the allocation, the equity allocation. But in this sense, it's a normal. I mean, people need to. There needs to be some type of correction so that people that were not on board during the rally can start to reinvest themselves, and the market has a natural process. And
is it a good time to buy stocks?
I'd say yes. I think we are maybe a little more halfway through the correction. We might have maybe a 2 or 3%. The data is still looking pretty positive on the economic front. We do have some speed bumps coming in from Italy with the re-election, the potential workings of Berlusconi. That's putting a negative picture on the election, and as well we have some new corruption problems in Spain. But if those things can work out or don't turn into something much bigger, I think the correction should just stabilize as normal, maybe another 2 or 3%, and we can move forward, because we did have a lot of progress as far as the crisis resolution.
And how were the earning releases for the fourth quarter of last year?
Well, overall, they were pretty good. Keep in mind that a lot of the analysts took down their estimates because the companies did their best job to lower their expectations. So most of the companies, if you look at the S&P, for example, in the States, the average is about 75 to 85% that beat the streets, that did better. So, and the tone is turning around, where the companies are expecting forward quarters to be a little better, and the economic recovery is at least taking foot, and maybe we have a new uptrend in the growth of the overall economy. But in Europe, we're still waiting for most of the releases from the Q4 2012. But it's looking also, they probably, since the expectations are so low, they should be able to beat the street.
And this week we saw how the markets reacted to the news and concern of Spain and Italy. There's a lot of questions hanging over Mariano Rajoy. Now, what impact do you think the Italian elections will have on equity markets?
Well, like I said, it could turn into something that kind of undoes all the good that's been going on in the Italian economy and all the restructuring process that Monti's been putting in place. Berlusconi is coming out of the woods. I guess he can't stand being retired, and is really not good for the country and not good for all the process that's been taking place to kind of mend the economy and restructure, because the actual people of Italy are more than willing to go through the process of maybe some austerity, some new negotiations on the labor contracts, etc. So the people are willing, the politicians are willing, but then if we have Berlusconi coming out and trying to shake things up, and right now the only proposition he's making are only to be re-elected. They're just don't make any sense at all. He just wants to federate the popular vote.
Now moving on to our Dukascopy question. If you had 1 million, where would you invest it? Would you invest in real estate, equity, bonds, gold, cash, or oil?
Well, I think first of all I'd say that in a diversified portfolio, I would actually overexpose that particular million into more equities. I think there's more opportunities at this time in the equity markets, that it be in Europe or in the United States, than it is in all the other asset classes. Bonds are, in a sense, in a bubble territory, are overvalued. Real estates in some areas are overvalued, but then it's just location, as they say. And I would say that equities, given what we've gone through over the last 10 years, the big corrections, the overall repetitious crisis that we've had, equities mainly in Europe, in the southern periphery, look to be more attractive. And also in the United States, where we have a still the growth machine that's enabling companies to do much better. So if you had to invest, I would say equities, for sure.
Thank you very much.
Thank you.
Well, that is it for right now, but do have a look on the Dukascopy website. I know there are interviews on Ireland and on Eurozone retail sales today, so keep an eye out for that. Goodbye for now.